Hey everyone, it is Evan here from The Trade Risk on Tuesday, July 23rd, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump into our market technicals dashboard. We can see markets finished green right across the board today. Everything up just about the same, 0.6% for the Dow, S&P, Russell, and the Nasdaq 100. 5-day change numbers moving back into positive territory, or trying to, in two of the four major indices. And we're starting to reclaim above that 10-period simple moving average again that we basically lost last week across the board. If we scroll down, we still have semiconductors out in front leading, even more so now, 4.77% over the past 5 days, followed by tech and materials. And on the downside, we have discretionary, utilities, and transports, all in the red, about 1%. When we look at major markets, we have silver, which is really running away here to the upside, 5.5% over the past 5 days, followed by gold and TLT. And on the downside, we have oil, we have volatility, and we have natural gas. So let's jump into the markets here with the S&P 500. We always like to start with the weekly perspective, the weekly candle picture. So each bar represents 1 week worth of trading, and we can see that so far it's been pretty quiet this week. We are essentially trading exactly within last week's range. And when we talked about sort of the weekend video from Friday, we noted sort of the selling, the down week, the pullback that we were seeing in the market across the board last week, but we were still above all of the relevant shorter term support area in the market. So technical support continues to remain, at least in my book, 29.55. That's the big area that I want to see this market continue to hold above. So long as it can hold above that area, I do want to remain, or at least attempt to remain constructive on having exposure here as we hold above the prior all-time highs made in April of this year. And so far, we are basically just carving out this sideways, this new short-term range above this key significant level of 29.55. So for me, I'm looking now just as this price contracts to see which way this ultimately does resolve. If we do break down, if we start to see some expansion and a breakdown back below 29.55, again, I'll surely be a lot more defensive, especially in the short term. But for now, we're willing to just kind of let the market feel its way through the start of earnings season here. We've gone 3 weeks, actually 4 weeks now, with really no price movement, 3.5 weeks with no price movement, just sideways here. So be interesting to see, how long this chop continues, and then ultimately which way this resolves. Is it just a continuation pattern to the upside and we continue the dominant trend, or is this some type of reversal? That's what we need to wait and really sort of keep our eyes peeled for when we get some movement out of those levels. But till then, 29.55 on the downside. You can use last week's lows. You can use the prior 2 weeks lows. If you want to be a little bit tighter, call it 29.65, 29.62 area. And on the upside, of course, there's no overhead resistance above last week's highs. So if we can start to clear and make new closing highs, then that's new all-time highs for the S&P 500. Now, if we go down to the daily chart here, again, not much new to say about it. It's basically been a pullback from last week. We're starting to reverse some of that pullback now this week so far. It is only Tuesday, of course, but we'll see again how the bulls can finish off the week and whether or not we can make progress back to the upside here. If we go to some of the other major markets, we'll go to IWM next. We still do have a position here in IWM. Remember, we talked about this position on Friday, but essentially we got the breakdown on Friday of this tight overlapping range that we were really paying close attention to as the Russell just really compressed here for a little over 2 weeks. It broke down. It got no follow through. It popped back. We ended up establishing a position here on Thursday, and we've basically just chopped around, and we came back a little bit back up into the bottom end of this range here. So still yet to be seen whether or not this can hold these lows. Again, we do have that position, but it is a loosely held position. If this starts to reverse, if we start to take out these lows, then we will be out of this trade. Nothing that we're getting too stubborn over or digging our heels into, just looking for a tactical move back up into this range. We'll see if we can get it. Nasdaq 100, last but not least, got no follow through from this day here. And again, that's an important point because, last week I think there were a lot of you could see just this sort of negative sentiment or the pullback sentiment just really kind of brewing or moving across just general sentiment, generally speaking. And we got no follow through to like this session right here on Friday where we opened up and then we just almost, engulfed the prior couple of days of trading. We really, again, came into this week here with Monday and we just popped right back up into this range. And then we followed through back to the upside here on Tuesday. So really, again, just makes it a difficult environment here in the short term as we're not getting convincing moves to the downside. We're not getting convincing moves to the upside. It's that hallmark chop that you have to be careful of. Sooner or later that eventually changes into a strong breakout, and for me, as we had just mentioned, 191, that was the area we were talking about for the Qs. We sold off into it yesterday on Friday. We held it, and so far we're above it. So for me, do want to remain optimistic so long as we are holding above 191 in the Qs. So that is it. That covers all of the major markets. We can take a quick look at the VIX here, which I believe is back into the 12s. So mid 12s again. So you're seeing that unwind there. We got as high as north of 14 last week. We've given it back in 2 days. We've sold off about 14% here in the VIX, and we're getting back down to these recent lows, year-to-date lows, back in the lower to mid 12s. So, of course, earnings season, that's what we're all looking at right now. So let's keep that in mind, and let's take a look at some of the other major markets. We'll go to TLT next, which is down slightly here this week, minus 0.36%. But this is another market here that just is, kind of mostly chopping, moving sideways here, and doesn't have any real definitive shorter-term direction. We've been essentially going sideways here since the start of June, holding about 130 for support, holding about 133, 134 for resistance, and we're looking to see this market just continue to move sideways here before perhaps an eventual breakout maybe later this month, early next month for TLT. If we go to oil next, you can see was up today, and on the week here it's up 1.2%. It had a pretty ugly week last week, sold off pretty good here, about almost 10% from highs to lows on this latest swing. It's kind of pulling back up into this area here, back into the 12s. Again, still pretty messy here. I don't really have any good close read on this, technically speaking. It just looks kind of messy, and I'd rather focus my attention elsewhere as a trader. Natural gas, on the other hand, I do still think is interesting. I've been saying how, this does look like it's at least attempting to put in some type of short-term bottom here for natural gas. It's sold off pretty strongly over the past week or so, but the volume was overall fairly light. Had a one high volume day here, another one back here on the 11th of July, but overall we're kind of back down to these lows. We popped up yesterday, inside session today, giving this a little more time here, but again, still sort of interested perhaps as a tactical long opportunity. Again, just tactical, not looking to overstay the welcome here in natural gas, but does seem like with the pickup in volume that we do have kind of an area of interest here where the market could be at some type of turning point. And I think that, in metals, let's look at metals real quick. We got gold, which really hasn't done anything this week. It's down about 0.5%, still kind of chopping around mostly in this sideways pattern. It had this nice explosive 2-day move last week on Wednesday, Thursday, but that was basically, the extent of it on Thursday. We came back down to earth on Friday, and then we've slowly, kind of pulled back here over the course of this week. So still, bulls got that trend going to the upside, but doesn't have the big momentum move like it did, or that is currently in place there for GLD. And last but not least is silver, which is still holding its strong momentum move. This thing started surging early last week and really hasn't looked back since. Volume has picked up. It's broken through multiple technical resistance levels. It's at new year-to-date highs here. So silver is still acting strong, does have a lot of momentum behind it, and dips still look to be, looking like they would want to be bought here. So I do think that that's an opportunity there if we do get some type of pullback. but more likely than not, more of a consolidation through time is generally what you see in the strongest of trends. So we'll see how this shakes out here for metals, but both looking still pretty strong here, gold and silver. So that is it. That is what I have for this midweek video. Hopefully you guys are doing well out there. Remember, double check those earnings dates. Thanks so much as always for tuning in and watching. You can subscribe on YouTube or follow us on the Trade Risk, thetradeRisk.com/blog. Have a great rest of your day, and we'll see you in the next video update.